All right, so I'm looking at this. This is gonna be a quick. It's gonna be a real quick. I'm not gonna be on here too long. I'm not gonna be on here too long at all. So real quick, I was just going over. I was actually looking at EURUSD on this 1 hour chart. Seeing that you've got a let's see, a flat top candle right here. And of course the market actually did this correction, as you can see, this ABC pattern. And again, I'm sorry I'm going through this kind of quick, but the goal is to actually see if there is a flat bottom candle. If you can get like a flat bottom candle on this, because mind you, all these candles here, like this candle, like all those candles are flat top candles. That's seller's momentum. And what happens is when you get your first flat top, you can go ahead and sell it, and you get your profit. Now that's only of course if the market. That's only if the market again is trending. Because if the market is trending and you know that okay, market is getting ready to do whatever next, then you're good to go. But if I get another flat top candle, I'm not going to enter this from the buy. I'm just going to wait. Okay, so I got another flat top candle here, so I'm not going to buy this yet. I'm just going to wait it out. Because what normally happens is you get. Give me 1 second. All right. So yeah. So this went out now. You can. Me personally, and I'm about to send this to my other chats. Let's see. All right. Me personally, if I got like something other than a flat bottom candle, I'm not entering this. I don't care if it's a doji candle. I don't care if it's a whatever you want to call it. I don't care. If it's not a flat bottom, I'm not entering for the buy. I'm just going to patiently wait, because this will let me know that the market actually corrected itself and that the market is actually getting ready for a upward move. Now I could do this on a bigger scale. Like I could do this on the day chart, or I could do this on a 4 hour chart, right? It don't matter. Like looking at this on the 4 hour chart, like okay, maybe you got some weak rejection. It's kind of let you know that the market wants to buy up. But if you normally the 1 hour and up, it really works. So I just do it on that. I'm just gonna wait it out though. Now if I do it on the smaller time frames, it's kind of like I can do it if I want to, but I don't, because the chances of me not knowing what's really going on are really high. They're really high. Like if I got in, I'm gonna put this here. If I got in here, right? If I miss all this or whatever the case may be, if I got in right here, if I kept trailing my stop, if I kept I kept, trailing my stop, taking my stop, and moving my stop. Like, I'm just gonna say, let me see here. I'm gonna put that there. So like, as the market keep going down, you know what I'm saying? Like, I kept moving my stop. Let's just say my entry was here. Kept moving my stop down. You know what I'm saying? Next candle with my stop down. Next candle was a flat top. Move my stop down. Next candle was a flat. Move my stop down. Next candle was a flat. I can move my stop down. Next candle was a flat. I can move my stop down. And I just keep going. So that way you collecting all that equity on the way down. Because a lot of people miss movements, but I'm telling you, like, and this is just a 30-minute chart. Like I said, you really want to do this on a 1 hour, or on a larger scale, because it really works. I promise y'all. Like, you go on. Like, if I was to do this on let's just do a short position. And the reason why I say move your stop is so that way you collecting everything that the market has to offer you. All right, so this is like 65 pips right here. Now, if you kept moving your stop, move your stop down, keep doing that, then that, like, again, you collecting all that. I placed this here, I think yesterday, because I seen this was like a respected zone. Like, it came in here, bought up a little bit. But you can see it came in here and then it kept going, bought up. So it kind of passed it, but it did buy up. But again, this was a correction. That's how you know this was a correction, because it went lower than what it should have went. Because when I'm looking at the market, a pullback is small. A pullback is small. Like, not obviously not like really, like, I'm not like talking tiny. It's a pullback. But a correction, you'll be able to tell what that is because it's big. Like, this is a big move. I can look at this and tell, okay, this is a correction. Versus, like, if I look at something like this little tiny area right here, I'm like, okay, that could be potentially a pullback because it's smaller. But this right here is big, so I'm like, yeah, that gotta be correction. And then how you know that is you just grab the Fibonacci, and let me take these lines off. And you just grab the Fibonacci and just measure it out. Oops. You just measure it out. Let me get this one out. You just measure it out. So, all right, cool. So, like, it's different on a bigger scale. But just keep in mind, like, this market. Actually, I'm gonna do it the opposite way. All right, bet. So if I drag this over just a little bit, all right. So this like the retracement, again, the retracement zone is right here. This is the retracement zone. So you want the market to sell off into here and then go back up, take out the highs. It doesn't do it. It does not do it. It comes down, it comes past that, and it sells off into here. So now that's how you notice you have a correction going on, because it came in here. Now, sometimes, not all the times, like, this is probably like the first time or second time I might have seen this happen, but you might get buyers to try to come up in here or something like that and then sell out. But if it don't do it, it is what it is. But overall, you know that this market is in a correction. So you know that the market is in a correction because this impulsive move came to this red box. And when you see it come into this red box, that just lets you know that, again, like, the market is in a correctional phase. Now, like, let's just say you want to get into the sale or something like that, and you like, I don't want to get in. I don't want to enter, and I don't know when to exit. I don't know when to enter, and I don't know when to exit. All right, cool. So this is the 1 hour chart. So yeah, you're gonna have a lot of more pips into one singular candle because there's a lot that goes on in one singular candle because it's a bigger scale. And so really like, okay, you enter on like your first flat top candle, whatever, right? So that's right here, right? That's right here. So you got little wick came up, but if you put your stop at the high and you left it there, you kind of like watched it and see, or you kind of look and be like, okay, well, you see what this is gonna do. You wouldn't have got stopped out, just barely would have got. You just barely would have made it, but that's probably like news or something going on, or whatever the case may be. Leave a comment if you're on, please and thank you, so that way I know that you're on. So if you missed this, or you missed this, or you missed this, whatever, then I mean you can always enter on your next one. So if you missed this one right here, and this is not a flat top, this one right here, then you just wait. This is a flat top. Okay, let me enter here. Oh, boom, let me enter here. Or if you missed that one, this is not a flat top, so you ain't gonna enter there. You're gonna enter on this one. Now, if you would have entered on this candle right here, that's like the perfect. That's the perfect entry point. And what that does is it pretty much like you can literally continue again, like I said, you can continue to move your stop in a profit, and then you collecting all of this. Each candle, you just collecting all that. So like all of this was like 100 and something pips down. So really, like the only rule like really is just to just trade. I mean, you're still trading with the trend, mind you. You're still trading with the trend. This is an uptrend right here. This is a correction. So you know the difference between the two, and you can easily mark it up, which a lot of people that I know they can do really efficiently. Like if you do that, then you're good. You're really good. So over here you got this uptrend, and y'all can see that this is an uptrend. I'm trying to I can see that this is an uptrend. You see you got a high, you got a low point. You see right here, you got another high, and you got a low point right here, and then you got another high. So there goes your trend right there. So there goes your trend right there. Let's see here. And yeah. So pretty much what you said. Like, you want to move like your stop at the open of the next flat top candle. So like, if you enter right here, right, you let it ride down, right, and each like candle, like each candle that opens up, so like each candle that opens up, so I mean, so this is your entry point. I'm gonna make this like a different color. I'll make that like blue. So this is your entry point. This blue line is your entry point, and obviously it goes down, you get profit, whatever, and not the next candle, but the previous candle. So as it keeps moving down, the previous candle that you got in on, aka your entry point, you can move your stop there. So market keeps going down, market keeps going down, market keeps down. You got on this candle, next candle opens up, you move your stop there. As each candle keeps opening up, you moving your stop at the top of those candles. So and that's just as long as it's a flat top, right? Since you're selling it. So again, like I enter here, right? I'm letting the market ride down. I'm in profit or whatever, and I either might have a stop, right? I either might have a stop, or I don't have a stop, and I'm trying to figure out like, okay, how much profit can I collect? And like I said, you just pretty much the previous candle, you just move your stop there. You move your stop. So market's going down. Okay, this candle is a flat top. That's my entry point. Okay, so as this one opens up, right? As this one opens up, Like I'm just waiting to see what the next candle gonna be. Now when the next candle opens up, right, I'm gonna move my stop at the top of that one. When this one opens up, I'm gonna move my stop there. When this one opens up, or this one opens up, I'm gonna move my stop there. So all of this, I gained on it. And at the end of the day, it kind of works out in your favor because it's like, okay, cool. Back. So I'm gonna show you what it looks like. So all of this you're gaining, right? All of this you're in profit. Like especially if your entry point was like, let's just say your entry point was like right here. Let's just say entry point was there. Market's going down, you move your stop. Market's going down, you move your stop. So I'm gonna stop here, right? I'm gonna stop here. My entry point is still here, but I'll keep moving my stop. So that way, if the market does, of course, right, if the market does retrace, then it hits your stop. It's like, okay, I still gain like 100 and something pips, maybe 50 something pips, whatever the case might be. And over here, it's kind of the same concept. It's kind of the same concept for buyers. You still want to do the same thing, you know. And again, this is the 1 hour chart. So I mean, you're not looking for like, okay, let me just get in and get like, I mean, if your account's big enough, yeah, you can do that. You can like just get in and get out. But like to each his own. Like for people that just like don't know what to do, I mean, that's really how you would do it. You know, like your entry would be like here because this is the first flat bottom candle that you get. So that's your entry point right there. And then as the market keeps moving up, the bottom of every candle that the bottom of your last candle. So here again, we stop here. Market decides to go up again, right? I'm gonna keep moving it. I'll keep on moving it. Keep on moving it. I'm like, okay, cool. All this is going up. That's just and this really works if you have like a small account. Like if you got like a $50, $60 account, maybe $20 account, something like that. It really works to help you grow your account a lot faster. So let me see something. So on this, because I already established that on EURUSD is a correction. I'm thinking on GBP USD. I'm sorry, NZDUSD. The same thing. Just a 1 hour chart. Yeah, I guess that will kind of work. I'm about to see this, cause like you could do something like this, or you could do, cause that does like now like something like this will count, like something like this, like the market will play like games with you, like they don't have you thinking like, okay, this market's not trending, or it's not or have you thinking that like the wave isn't actually like finished, or have you thinking it's done and it's not done and all that kind of stuff. So like you could do something like this, right? And then of course like when you look over to the right, you can see that the market was in a correction. So like this. So right here now, okay, now right here in this area, I'm gonna like take this off over here because I don't care about that stuff. Cause I had that like kind of like marked up. Tweak this. So I'm gonna get a box. I'm gonna use this box. So what I'm gonna do is I'm gonna get this box, and this is real support right here. Cause look at this. So I'm gonna drag this up just a little bit. So like pretty much like if I'm like going back to like look at what the market's doing for real, like this it came back to the box. Rather like came all the way in there, or rather it came like an inch in there, like it don't matter, it still came into this box. So this is like a really good area of support. So like not only that, but the market looks as though it's pretty much went down for its correction, and now like you see like okay, you see like wick rejection like coming out of this box. At the same time, now all I'm doing is I'm waiting for a flat bottom candle, and then I'm going to enter for the buy. And this is just an example. I'm not getting into nothing. I'm just giving y'all an example of what I would do if I was looking at this market right now. Now, if I don't have a flat bottom candle, I'm not getting into nothing. I'm not. I don't care if it look good. I don't care if it sound good. I'm not getting into nothing, because that's just how my discipline is. Like mentally, like if I don't have no kind of like confirmation, like to let me know I need to get into this trade, I'm not doing it. Like you can see like all the confirmations over here. Like I promise you, like if I was to keep, if I was to trade this right here, like this whole impulsive move right here on this side, right? Like the whole little thing I told y'all about moving your stop in the profit and all that. Like okay, each candle that goes up, like a scenario like this would work for that, because you know what I'm saying. Like you're actually like you're trailing your bread. You're trailing it like every time that the market decides to go up or go down or whatever the case may be. Now for EURUSD, because like for EURUSD, I'm still waiting on a flat bottom, but I ain't getting it, so I'm not gonna get into that. Like a lot of people are like, oh, I see wick rejection, let me get in. And then they get in, and you see the sellers still coming in. They're like, yo, hit my stop. Like let's say your stop is like somewhere in this week. Let's say your stop like right here. Like and you got into a trade for let's say you got into a trade for a buy like right here. So you like, yo, like let me let me get into this for the buy. Let's just say, and you're like, man, like this thing gonna go up for like 40 something pips. Then stop right here. You're like, oh damn, I got the trade. Like, yeah, you got knocked out the trade because this is cause see the thing is like with Hakanashi, like that just stands for average pace. That's why it's called Hakanashi, because it's average pace. It's the average pace that the market's moving. So if like with the regular candles, obviously y'all know that like it's kind of hard to predict price movement, or it look like price is doing something but it's really not doing it, and all that kind of stuff, and it's just like it just doesn't make no sense. So one second. I'm trying to find, what is this? Oh yeah. All right, bet. So what's I saying? So like you see, like okay, like market is still kind of creeping down. And mind you, like I said, like normally, like in the morning times, like I think I said it on like one of my older like live videos or live streams. Like in the morning times, like that's really when you're gonna get moving on like the USD because that's the US currency and that's most prevalent in the New York section. So that's what you're gonna get. You're gonna get moving on that. You're gonna get moving on the US dollar. When we look at the DXY, okay, DXY bought up. DXY bought up. As you can see, let me see something. So let me delete this. So the DXY bought up, it makes sense because if the DXY bought up, that means that the dollar is gaining strength, which means that it makes sense for the market to start to drop on like Euro USD, GBP USD, all those. Like it makes sense because if the dollar is strong, that means that the market should be pulling down. So like if the DXY had like let's say the DXY like had like some kind of pullback and like news started to happen, like news happened. Let's say you got the DXY to go like this, like here or something like that, and then this is decide to do like that. Let's say you get something like this, and like this right here is still a pullback. So you gonna get buyers to come into the market, or you're gonna get buyers to come into the market on your USD pairs. So like USD CAD and or not USD CAD. I mean your USD, GU, NZDUSD, all those currency pairs that have USD at the end, you're gonna see buyers come into those. Why? Because the dollar is selling off, which means if the dollar starts to sell off, that just means that the dollar is weakening, which means you're gonna see movement going up. Versus if the dollar is strong on the DXY, then that means that the market is going to be pulling down on most of your US dollar currency pair. So like if I go to like CAD, or no, I'll get CAD, USD CAD. If I go to USD CAD, right? Okay, so USD is obviously is strengthening, right? It's strengthening. So if the US dollar again, because the US dollar is strong on the DXY, I'm gonna see up movement on this. So around like New York session, I'll be looking to buy this based on kind of what information I got from my DXY. So like if I go back to the DXY again, you see you got all this up movement, right? You see all this. So like if somebody used this in correlation with kind of like the candlestick patterns and also combine that with your trend, you're good. Because if you're trading in the right direction, that's one thing. If you get a confirmation based on your candles, that's another thing. But if you're using the DXY to help you get a better idea of, okay, the market is going to do this, then yeah, so yeah, it's definitely a good idea to look at that to see, where it's moving. So like, okay, so US 30, something like US 30, like a lot of people probably don't have, I guess, bread to trade US 30, but US 30, if the DXY is strong, then on US 30, you should potentially see some buyers in there. So I'm gonna go on US 30. Which one I want? I just all right, cool. So like I said, you seeing buyers on the DXY. So it only makes sense for buyers to have come into the market on US 30. So hypothetically speaking, one's tied to the other one, and then you can kind of get a head start. You can get a head start on your trend, a head start on your move, whatever the case may be. So like right here, this is of course this is a really strong uptrend. Here's my lowest point, and then I get this right here, and I get like a little pullback. Um, or actually, I can start from here. I can go up. I get my pullback. I get my third wave, my fourth wave, my fifth wave. So technically, I feel like let me see something. All right, let me pull this down. All right, so I'm looking at this. I'm like, okay, that's my first move, that's my second move, and my third move, my fourth move, and then my fifth move. Pull this down. So this is what I made out of this, and then everything to the other side of it is in a correction. Like all this is just a form of a correction, like a form of a correction. So like if market is like way up here, and I'm thinking like, okay, market's gonna sell off or something like that, then it'd be like, okay, well if you get like confirmation up here, like okay, this market's gonna continue to drop, then it'd be like, okay, I can enter, type of thing. Like up here, this is not a flat top candle, so I wouldn't enter on this candle. You see, you got like a little wick at the top, so I wouldn't enter on this at all. But imagine if you knew this on US 30, because you know US 30 is really volatile, so you're gonna get like a lot of movement off of that because it's so volatile, because it moves. And like from here to like somewhere down here, that's a lot of movement for US 30. You know, that could be like that's some easy pips on that. Easy points you could have caught on that index. What's right here? And I know, like, I think I had mentioned it like before, like literally, like if you literally like think about it, like if the market moving sideways for a minute, then that kind of means that the next impulsive move will kind of be wider. So like you see how like you got this impulsive move going up, and then you got this impulsive move going down. Well, there was barely any consolidation in between these periods. That was meaning that the market was going to just go down, and then it was going to just, it was just going straight down. It wasn't going to be like hella wide. And then you see like, okay, it went down and then it went up. Versus, okay, here it went down, kind of consolidated for a little bit, and then it went up, decided to go up. But the move was wider. Right? The move was like, it still went up, but it was kind of like widening out. And you'll start to notice things like that as you like start to look at the market, because like right here, like this is like a really good angle. You know what I'm saying? Like right here, it's like, okay, this is a different kind of angle. Like on a demo account, like if you was to test this out in like the next, like I guess like was it next 28 minutes or so, if you was to test this out and you was to look at US 30 and on your demo account you was to enter on the next flat top candle for the sell, I promise you're gonna be up. Especially given what y'all looking at the market with me, like y'all already know the market was in a really deep uptrend. And so like normally your correction like comes like somewhere near your third wave, like maybe it come like somewhere like right here. I'll put like right here at this low. Maybe it might come like somewhere right there, just to say. So, but on in reality, if somebody was to enter on a flat top candle and then keep moving their stop on US 30, and then keep dragging it all the way down till you get to here, then like that's like some good bread. That's some good bread right there. Oh, man. All right, so on what was it? EURUSD. All right, so EURUSD, I don't really see like, cause one thing that you'll notice is like at the end of like every like impulsive move, you're gonna see like it wick out. Like, you're gonna see like a really huge wick before the market starts to head down or head in the opposite direction. So like right here, like I got like 27 minutes in this candle, but I don't really have much of any wick rejection. The only thing I have really is this candle here. But I want wick rejection on this candle. I mean, yeah, I got wick rejection on this candle, but I really 9 times out of 10 want to see it on this candle just to be safe. Because if not, then you're gonna be like, you know, SOL, and you're gonna be like, oh, such and such a thing happened. All right, I'll pull this up. So yeah, that's the move, y'all. Like just to keep on like to like you can mark it up as a trend or correction, and you can trade it anytime you want to trade it. Just make sure that you got some form of like a confirmation. Like I think earlier I was like, yeah, the market's gonna sell off. I was like, yeah, the market's gonna sell off, and it ended up selling off. Because when I went to this 1 hour chart, I was like, oh yeah, the market still got to sell off. Like the market like normally comes like to your, it doesn't take out this low for sure. Like that's the one thing that I will say. So like this, hold on, let me see. Let me get out of the box. Like this right here, like this low, it does not take out this low. The correction would never take out this low. So I'll draw me like a box here. This low point, it won't take this out, which tells me that okay, this supposed to move is kind of coming to an end, like it's kind of getting exhausted, right? So as I see it getting exhausted, I just look for confirmation as to when I can get in for a buy, because I want this to buy up, right? I want this to, you know, I want this to continue to go up. You know, I want this to go, you know, my 1, my 2, right, my 3, 4, and then my 5. Like I want this to do that, right? I want this to do something like that. But if I don't have no confirmation, I'm not getting into nothing. I just don't care. Because I'm telling you, like, especially if you risk big and then you get like some form of like big drawdown, and that's another thing too. These Hakanashi candles, they help you to understand, or they help you to get less drawdown. Help you get less drawdown if you use them the right way. I mean, if I change back to regular candles, I swear, like the market will look like it's doing something, but it's not doing nothing. It's really, there's no clear sign. Like, I mean, yeah, you got like a buyer's candle right here, right? But like, a lot of people will just get confused, like looking at this, like off rip, they're like, yo, what is this? You know what I'm saying? Like, man, like what? So let me go. I should use back to Hakanashi. Oh, what is step line? Oh no, ain't nobody trading that. Ain't nobody trading that. That just looks like some kind of like Tetris. I don't know, like Tetris slash. I don't know what that is, but anyway. Hakanashi candles. Hakanashi candles. So now I'm just waiting for this, waiting for some form of rejection. Right, I'm waiting for some form of rejection off of this candle. And if I get that, then I get this next candle, we like on flat bottom, I'll enter. And I think it's on, USDJPY buyers. So I think this was like a new uptrend. I think it was. This is like I'm looking at a new uptrend. Yeah. So yeah. So on USDJPY, you're gonna be looking for sellers on USDJPY. You're gonna be looking for sellers on USDJPY. Yep. They got these lows. I always wonder what this would look like if I'm gonna try it. Like I think ABC. I look like this definitely is like this is like an ABC pattern right here. I know I'm not tripping. See, look, I'm finna mark this up now. So I got my 1 through 5, and then I got my A right here, my B and my C. But y'all notice what I'm talking about, like literally, like if you want a really good support, like it's really gonna be around that second wave. Like it really gonna come back to that. This like, I'll be like that. Like, it's really gonna come back to that 9 times out of 10. But you see, you got market coming to this box, and then you got to buy back up. So yeah, this really will work. That's another hack. Like that second wave is really gonna be good for support. So if you really want a really good impulsive move or a really good start to a trend, you can look at where 2 is and kind of see if it'll respect that, or you can look for your confirmations in this box. It's like in this box, and I did wick rejection. I got wick rejection. Coming out of the box, I got wick rejection, and then I did get a flat bottom candle. But you can see the market went down, like down here somewhere like that. So if I was to miss this, like over here in this area, and I get movement coming down like that. Mind you, my stop, I will put my stop like at the bottom of the box, just to be on the safe side, and I will keep it there and watch what happens in this area. Right, I will enter the first flat bottom candle, which is right here. I will enter on that candlestick, and then I had like some drawdown, but it don't look like that much. I had 24 pip drawdown. I mean, that's not too bad. I really don't want more than like 30 pip drawdown. Like that's like cutting it close. And then if I want to, take it up a notch, I would really remove a stop like right here, because that's where I got weak rejection. So I'll move my stop there, and I got like that 24 pip weak rejection, or no weak rejection. I got the 24 pip drawdown, and I mean after this right here, like if I get like weak rejection coming into the box again, which it kind of came towards that box. I mean the next flat bottom candle, which is pretty much in the same exact area down there, I would enter there, and I would just do the same thing. I was like, well, I ride it up. And then you can see like you got your new uptrend. Let me put it down. So you got your new uptrend. See, this is exactly why I'm looking for sellers to come into the market. Because when I'm looking at this for myself, I'm like, okay, like somebody will use, I guess, this as like a, okay, this is the pullback, this is your high, whatever like that, and maybe you can use this as like a correction or something like that. I mean, you could actually, let me see something. You could use this as a form of correction, but because I spotted a correction over here, because I spotted a correction over here, I want this to like kind of like go together, like your fourth wave, like it really like it's really, I don't want to say it's always deep, but it does come. You know what I'm saying? It does come like in somewhere near like your, you know what I'm saying, somewhere near like that halfway point of your third wave. Not all the time, but just sometimes. Where you see you got buyers who come back in here again, and then that's why I'm thinking like, okay, off of this candle, if I was to get another, or if I was to get a flat top candle, then I would enter UJ for the sell. And for it was another one I looked at. Okay, GBP USD. On GBP USD. See, this is where like it get kind of tricky, because if a person don't know like the differences between like the correction and like the trend and all that kind of stuff, you're gonna look at this and say, "Oh man, this is a big." Because I used to do this. Oh, this is a big space or a big pool for the market to just pull down into. But 9 times out of 10, it don't pull down to that area, and then they get rejection, and then you just see the market just shoot up. So let me see something. Actually, no. I'll start from there. So like this could be the move. Like, I mean, you could say that, but this it don't even like look right. Like for this to be okay, ABC. Like that's not even valid. So what I would do is I would do this. Okay, this is your A wave. Maybe your B wave will come up. Your C wave can drop down. Because normally, remember I said C normally comes down to like at least like your halfway point or somewhere near your halfway point of your third impulsive wave. So yeah, this is like, I think this is why I would get buyers on GQ, because not all of them will do like, I mean, most of them will look the same, but not all of them will do the same thing. Now, if the market just continues to sell off, then I mean that just means that everything else is going to continue to sell out. Like all of like the USD pairs I was looking at. So like when I was looking at EURUSD, like that might potentially look just continue to sell off. And that's just if I don't get no form of like, you know, if I don't get no confirmation. So if I don't get like again, I'm sitting here looking like, I'm like, I don't really have, I got a little bit, but I don't have like a wick rejection like how this is. I don't have that yet. So I'm still gonna wait it out and see what the market kind of does, and then yeah. But anyway, like y'all drop a pair that y'all want me to look over or something like that, cause I know I did. I did go over. Let's go over. Everybody likes CHF. Do CHF. CHF, alright. Oh Jesus. That thing play up there. Alright, so start from my lowest point. Here's my lowest point. Go up. After that, I got pull back. I got, honestly, I'm not gonna lie, like all this can either be 3. I could do my 3 here, I could do 4 here. That don't make sense. So, or I could either do I could do my 3 at the top of this and then let my 4 come down. So I think that's what I'm gonna do. This here. My 4 will probably come down near this halfway point. And I get my 5 to go up and take out that high point right there. And then as like an alternative, like the way I seen it at first, I was like, okay, well this could be like, like this could be like my 3, this could be my 4, and then this whole thing right here could be my 5 since I have sellers coming in now. But I don't know. I don't really look at. It's not that I don't trade CHFJPY. I just don't look at it often. Like it's not like my go-to. It's not like my go-to thing or whatever. Like unless like somebody want to look at it or something. But you see how like I got this flat top candle. Like this was like my well, this is the first one I seen. The first one that you got was right here. Your stop is here. Didn't reach your stop, no, it didn't. So you still good. So if you continue to get a flat top candle, then you move it, you're in the profit. Let's see here. Where is yeah, it's like 18 pips. Somebody could have got it. Another thing you could do is let me go to here. Okay, so I'm doing how I was my train of thought. New York Factory Index. Okay. I'm gonna look at those now. It shows increase activity for the first time. Hmm. Anyway, so just waiting. You got like 6 minutes left in this candle. All right, y'all. So let me see here. So I'm about to get off here. I'm about to get off on Zoom. I'm about to get up on Zoom. Yeah, I'm about to put this on Zoom. Let's see here.